If you're new to trading, I'm going to show you the simplest way I approach gold. I'm going to show you one setup using a 5-step model. The most common mistake I see beginners make is entering too early. I'm going to show you what I wait for and where I would enter. My name is Alex and I'm a day trader. I also run Halo trades. This channel is beginner friendly. I want to keep it simple and step by step. By the end of this video, you'll understand where I mark my levels, what I wait for, and how I find my entries and targets. Just before we get to the charts, I'm going to put a QR code right here. This is for Halo trades. This is where we give out free education, free insights, and free trade ideas every day. If you're new to trading or want to learn more, then join this community where there is tons of value. Just before we do get started, there are 3 terms we need to be familiar with. They are liquidity, a sweep, and displacement. And liquidity is where stops are. This is usually below lows and above highs. Then we have a sweep. A sweep is when those stops are taken out by price. And then we have displacement. Displacement is usually a strong move with intent. All of these 3 terms are going to be important in the video that we're going to go through now. Alright, cool. So this is where we jump onto the charts. And this is where we begin something called a top-down analysis. Now with a top-down analysis, we're simply looking at larger time frames and working our way down to the smaller time frames. And as we go through each level of time frame, we're just collecting information and we're collating that together and seeing what confluences we can find to help us find our entry points, our areas of interest, and our key levels. So first thing we look at is if the price is trending up or trending down, if it's a bullish or a bearish market, and we decide that by seeing if price is giving us higher lows or lower highs or lower lows or lower highs. So we're just looking here for what the larger areas of liquidity are. So as we go through a daily, we can see that prices came all the way up and then he started printing lower lows and lower highs to give us a bearish momentum down. And as we decide that on a daily, we can go into a 4-hour time frame then, and we can then do the same, and we can see what we're seeing on the 4-hour compared to the daily. Now on the 4-hour, we'll see a more zoomed in effect, and we'll see more market structure. Now if you do want to see a video on market structure, then just do a comment in the video below, and we will look into market structure for you as well. Now we can see that price is also printing lower lows, lower highs still, so we are still bearish. We had a slight pullback here, and then we continue to the downside. Now you'll notice here I've got these blue lines and this mid-range and this blue line and this mid-range. Now these are psychological key levels or just key levels. If you do want to see a detailed video on that, then do comment key levels below and we can break that down for you as well. Now I've drew a few on here. This is a trade that I'm in already on the sell, and what we're looking for is that liquidity and that sweep and that displacement to give us confirmation. So we've given us a confirmation of a bias and direction being bearish from the daily and the 4-hour time frame. If we now jump to a 1-hour time frame, we want to see what price is doing around these areas of liquidity, these key levels as we mentioned. So we can see that price has tapped through it but rejected it and came back up. We can see it's tried again, it has fake tape below it and then came up again. So we can also see strong displacement candles here. So these are bearish engulfing candles that are coming down and pushing price right the way through. So we're still in check for a bearish market. We're still in bearish structure and we still are looking at positions to the downside. But we want to see what price is doing at this key level and how it's reacting. So we haven't had confirmation below the key level yet. We had a few small candles close below, but nothing with real intent. And then we've also had strong displacement back up again. As we go further across into a 1-hour, we can see that it has came below the key level again. However, this time it took out the previous lows of that area before, close to the mid-range. And what you'll see here is a strong engulfing displacement candle. So now we're ready to look at our 15-minute time frame, and we're looking to zoom in a little bit more and seeing what it can do. And you can see the position that we've taken on one of the accounts here. What we're going to show you now is what we looked at when we entered. So we saw price break below the key level, and we had good confirmation that it is staying below that key level. If you look at these candles here, we've got strong bearish continuation candle set up right here, all 4 candles, all large in structure, and there's no dojis, there's no indecisiveness. It wants to go down, price is going down, people are selling. And those sells have all been placed in from key levels and then continued down. What stood out to us though, if we go down to a 5-minute time frame, on this 15 we've got a large wick here, which says that buyers were losing their strength and sellers were trying to take over the market. If we go down to our 5-minute time frame, what you're going to see here is when the buy side lost their power to the sell, there was a big wick here, and then we had a shooting star candle. A shooting star candle is a major confluence for us in this type of strategy. If you do want to know more about candles and patterns and what they mean on the charts, then do a comment on this video, candle, and we will do that video for you too. But just for now, while we're looking at the liquidity, the sweeps and the displacements on why we enter, we consider we've had a sweep, we've had a shooting star, which is a confirmation confluence for us, and then we've had a large area of displacement where a candle has came, and it has also had the body of that candle lower than the body before that. This is a good indication for us to enter. We only enter on 5 minutes. We may sometimes use a 1 minute when we're looking at refining our entries and exits. But now we found our entry, we want to find our point of target for where we want to get out the trade. Not only do we want to find our target, we also want to find the area that we're happy to know that we're no longer in that trade, which is our stop loss. And this is when we feel as though the trade is being invalidated, and we want to, manage our risk correctly and make sure that we're staying within the parameters of our strategy. So when we've entered, we've looked for our next target, and we've entered just above a mid-level here, and we've had strong action below that mid-level previously. So now we're hoping for price to take through that and continue down. The next logical area of us is that next key level. Price is drawn towards liquidity. There is always going to be liquidity at key levels in gold. So that's our first take profit right here. Now, as you can see with this trade, it came down to the key level, which we have at 4,400. And I think it was 150. So it was $1.47 away from that key level. Now, what we did when we was in the trade here on one of our accounts, we managed to get out just after a rejection here, and we saw this certain candle pattern. Now, this candle pattern again is important to us, and if you want to find out why and you want to get a video on candle patterns, then do comment candle patterns below and we'll tell you why. But when we was refining this entry and exit, we was able to see a bit of formation here, and we was able to close for profits on this trade on the one account that we have running. Now, that trade took about an hour, I think it was, and within the hour we made 450 pips, which is honestly amazing on gold. Now, the reason I said we had two accounts and this was the one trade on the one setup is we also placed another trade, which was a long-term trade that we're trying to hold at the moment, and that is for a take profit down here. Now, the take profit is decided here by -27 extension on a Fibonacci retracement tool. Again, if you're new to Fibonacci and you want to find out where we just came up with this level, and then comment Fibonacci below and we'll tell you how we find those levels of targets past key levels. And as you can see, sometimes it's hard to find targets when there's no price action to the left for a long period. You're talking nearly 2 months since prices hit these lows before. So that's why we use certain retracement tools like Fibonacci. Now, the second trade we took on the second account for us that we're still running, we're aiming for this to go all the way down to this Fibonacci area at 4,340, and we are still running that trade. Now, this trade did come down, and we have not scaled our stop loss or moved to break even on either of the positions, not the one that we took profit on or not the one that is still floating profit right now. The reason we didn't do that is because we're confident in the setup. This is the exact setup we look for, and we've took these trades and executed them time and time again, and we have confidence in allowing the trade room to breathe and allowing the trade to prove itself. We can see, if I move this over, that price did come back to entry and did also tap into drawdown just a little bit, but we've already accepted that that is a risk we're willing to take on this trade. There was no need for us to scale or break even on that trade, as we have full faith in the trade. It also hasn't taken out previous structure of the highs here, and the reason we had the stop loss where we did is we just want to place our stop loss just above that wick sweep where it was before and just allow it that space and time to breathe. Now, if you want to see how the trade finishes when we do get to that point, then just comment below and we'll do a follow-up for the secondary trade and see if we did get all the way down to our take profit here. We're going to monitor it and see what price action does when we're around the key level below, and hopefully we can get a breakthrough and a continuation below that key level, and yeah, hopefully we can get 2 from 2 on that trade. So there you have it, that's the full process. Location first, confirmation, and then execution. If I don't get the relevant confirmation, I simply don't take the trade. I'll just wait for another setup. And make sure you're following Halo Trades here. This is where you're going to get free education, free insights, and trade ideas daily. I'm also going to put the checklist into that channel. And if you want the checklist yourself, then comment below and I'll forward that over to you.